Okay, hello there, traders. Hello, welcome to Admiral Markets Market Pulse Weekly Update 29 for the 4th of June 2025. I hope you're all well. I hope you have had a good start to the week and to the month, and that you're ready to make the most of the opportunities that are provided in this rather eventful and interesting year that we find ourselves. As always, we're here at Admiral Markets on the weekly update to help guide you through these rather volatile and eventful markets, but more of that later. It's great to have you here. Hopefully, as always, that you can see and hear us okay. Always plenty for us to discuss, so let's get a move on and take a look at what these markets are showing us. As always, we'll start with a quick risk disclaimer. You can take a couple of moments to make yourself aware of that risk disclaimer, just remembering that trading on margin does involve risk and that ultimately you are responsible for your own trading decisions. As always, for the Market Pulse Weekly update, our agenda is to help you, okay, to help you to understand and analyze global financial markets. And most importantly, how can you, as traders and investors, turn that analysis to your advantage? And then along with that, we'll also be showcasing how you can trade and invest with Admiral Markets. So there's always plenty for us to discuss, always plenty for us to talk about. As always, if you have questions or comments or something you'd like me to look at in particular, you can put that into the chat box, or if you're watching this later on the Admiral Markets YouTube channel, you can put that into the comments, or you can contact us directly, and we'll happily take that on board. We want to make these sessions as helpful and as beneficial for you as we possibly can. For those of you who don't know me, my name's Paul. Traded and invested for many years, traded for funds and traded for clients. In my trading pathway, okay, in my trading life, I tend to focus on trading FX, indices and commodities, where I am a trend trader for longer term swing and position trades, and I'm a reversal for short term trading. And then when it comes to my investing, I'm much more about sector focus, much more about intuitive, and much more about basically utilizing sort of my everyday access to following markets to help provide me with the opportunities I desire. So, plenty of videos, and I'm always happy to share as much as I can with you. Some of you watching this, you are not only at the start of your trading or investing journey, you're also at your start of your journey with Admiral Markets. So always try and give you a little bit of help and insight into who Admiral Markets are and how they can help you. Admiral Markets are a global financial brokerage that provide a wide range of financial instruments across various asset classes, that also provide a comprehensive education suite to help you on your path. With regards to education, there is a wide range of educational content, including webinars like this, which involving either market experts giving you their insight or overall market analysis, like our session here. You also have access to the premium analytics portal, and you also have access to the research terminal as a client of Admiral Markets, and we'll look at that later. And there is also, as I say, a wide range of educational content, both on the Admiral Markets website and the Admiral Markets YouTube channel. So I'm commended to you make yourself available to those. For those of you who are more interested in a trading pathway, Admiral Markets provide over 4,000 available instruments as FX and CFDs on commodities, indices, and stocks. That provides you with a sophisticated trading environment with standard leverage for retail clients, and you can access and engage with markets using both the MetaTrader 4 and MetaTrader 5 platform. And there is also the Admiral Markets mobile app for those of you who like to trade on the go. For those of you who are looking for a more longer-term investing pathway, Admiral Markets provide access to over 4,000 available stocks and exchange traded funds. There is also the opportunity to engage with fractional investing through fractional shares and fractional ETFs. There is an auto invest capability in the mobile app. And when it comes to platforms, you can have MetaTrader 5 either as a downloadable version or as a browser-based web trader version. And there is also the Admiral Markets app. Okay, ladies and gentlemen. So I think I said at the start of this year that we were in for a rather eventful year, both in life and markets. And here we are now already into June. All right. And I think it's fair to say that it has been very eventful in terms of both life and markets. And I appreciate that if you're at the start of your trading and investing journey, that actually the amount of volatility and eventful experiences that we've had in 2025 alone can somewhat be maybe a little bit overwhelming or a little bit intimidating for people to try and make sense of that, and also to see how they can turn these events into investing and trading opportunities for themselves. So hence why we have the Market Pulse weekly update, a regular weekly webinar in which I'm here to sort of help navigate you through these global markets and also filter the information that comes our way. We live in an age where you are like overwhelmed and overloaded with the amount of data that is available. And part of it is about actually filtering out to find the bits of data that are useful to us. So hence why every week we take a little look at, what is the major news? What are the narratives? What are the themes that are affecting markets today and for the next week ahead? Okay, from here, where are we? Sort of Wednesday, 4th of June till Wednesday, 11th of June next week. I'll provide analysis of major global markets. So we will look at the major global indices, some of the commodities. We'll look at the US dollar, we'll look at sterling, and then we'll also look at UK stocks. And along with that, we'll provide you just a little bit of insight into the technological solutions that are provided to you by Admiral Markets. And as I said, the whole idea is to help educate you and provide insight on markets and the way traders and investors can engage with them. So as I said, plenty for us to talk about, okay? We have lots going on, both in life and markets, and hopefully these sessions give you an opportunity, as I say, just to help make sense of them, so you're in a position to navigate, so you're in a position to turn them from a threat into an opportunity, and that's what we're looking for. So, without further ado, why don't we have a little look at what's been going on and what are the kind of news, themes, and narratives affecting the markets at the moment. Excuse me. So, as I say, most weeks, I appreciate that. If anything, that it's not the case for new traders, investors that you can't find the information. It's actually quite the opposite. There is, a deluge of information coming your way, and if anything, it's part of it is about how do you filter out, which of the information is worth focusing on, and which is just a sort of, background noise. Now, part of the first element is about understanding the economic data that comes to the market. If you knew as a trader or an investor, I would not expect you to be able to analyze the bits of economic data, but it is important for you to know when that data is coming out, okay, the formal economic data, because the likelihood is that kind of data will induce volatility into a market, and volatility is a double-edged sword. All right, when you're on the right side of it, it can make for a great session. When you're on the wrong side of it, it can make for a challenging session. So it is in your best interest to, first and foremost, to understand the kind of economic data that is being released in this week. And you can do that on an economic calendar. There is an economic calendar on the Admiral Markets website and elsewhere. So there's no real excuse not to know at least when the major economic data is coming out. But I do realise even the economic calendar is busy on a week's basis, okay, and there's lots of economic data coming out for global markets. And what I try to do here is just try to help narrow it down to a few elements that are of importance to you, okay. And also, as we switch across to looking at the live markets, we can start to see how there are already impacts sometimes being felt in terms of the way markets are manoeuvring. So, earlier today, Early today, we had on the 4th of June, we had the Canadian Bank of Canada rate statement and their press conference. The Bank of Canada decided to remain, okay, at I think it's 2.75% on their interest rates. But as part of the conference, they kind of did sort of hint at perhaps there might be a cut in, I think July is when they said. So it was basically no movement today, but perhaps in a couple of months' time. What was probably of a bigger shift to markets, okay, what we saw when I say this afternoon, I'm talking about us here on, let's say, UK and European time, is a couple of pieces of the major data that came out of the United States. So firstly, we had the ADP Non-Farm Employment change number. Now, this is it's the first real week of the new month. So invariably Friday is, as you'll see there, okay, is first Friday of the month is normally the kind of non-farm jobs numbers. And before that, okay, we have a series of jobs or unemployment data that comes out running up to it. That sometimes helps us, get a sense of the overall narrative. And sometimes sometimes it can support what traders and investors are expecting, and other times it can be a little bit of a bolt from the blue. The thing about the ADP number non-farm, and I've mentioned it before, is ADP is a private company. They are a payment processing company. So it's using their data from private companies. And because it's from private companies, sometimes those numbers can be volatile. Okay, so sometimes it can be a really beneficial heads up of what we're likely to see on Friday. Other times it might actually contradict that. But certainly today's numbers were of interest. I have to just make sure I got the numbers exactly right, because what was forecast was forecast for numbers of 111,000, okay? But actually what was delivered was 37,000, okay, jobs for the last month. That's a considerable undershoot, okay, on the expectation of the number. And we saw that have an impact on markets, okay, and it made this afternoon session within the sort of trading, for those of you who sort of intraday trade American indexes, it made it for a rather volatile session, and we'll look at that in a moment. What was also happened was a little bit later on in the session, we had the services PMI for the US. Now, remember what I said there. I don't expect you to be able to analyze the economic data if you're at the start of your journey, but understanding PMIs is a good starting point because it's relatively simple, he says, in that we are just working at an arbitrary number, okay, of 50. If the number printed is above 50, that shows you that part of the economy is growing. If the number is beneath 50, it shows you that part of the economy is contracting, it's weakening. And so the services PMI for the US afternoon, okay, it was forecast to come in at 52, so above the 50 number, but actually it came in at 49.9. So once again undershooting by a considerable number, and also beneath 50, okay, showing that the services side of the US economy is in contracting. Now, of course, we have bigger themes going on in terms of, has that number been really impacted, really affected by the ongoing uncertainty caused by the sort of Trump tariff talks, tirades, levels that we have seen over the last couple of months now. Okay, has that had an impact on it? Some might say that actually is starting to impact the economy, but certainly both those numbers undershot. Though both those numbers undershot by a considerable amount, that induced volatility into the markets. And we'll look at that in a moment to help you with it. But as I was saying right at the start, it's important to be on top of the economic calendar in an effort to basically ensure that you understand these kind of major pieces of news and the impact they can have upon markets. So tomorrow, what we have is kind of the theme, or the sort of the focus will switch back, certainly early doors in terms of switch back to Europe, and in particular the European Central Bank, the ECB, has their monetary policy statement, their rate and their press conference. Most people are expecting a 0.25% interest rate cut out of Europe. They're expecting that kind of 25 basis points. But once again, what we'll be interested is Ms. Lagarde from the ECB, what she'll have to say about the future trajectory. That's what traders will be keenly watching on that. As I said, we also have unemployment claims, in the US tomorrow afternoon. And once again, after the numbers of today, people will be interested to see, what, if anything, those numbers have and whether they undershoot as well. And then on Friday, we've got jobs in Canada, which are relevant and of interest, but really the main focus is going to be on those US non-farm jobs numbers, early afternoon for us here in the UK and Europe. But first thing for those of you operating on New York Eastern Standard Time. Once again, those numbers here, I'm just looking here, those numbers, are expected in at around about 132,000, which in itself is kind of a lower forecast number than we've seen over these last few months. And people will be keen to see, well, that number is much lower than we've seen. Is it B, going to be like the ADP numbers, in which case another undershoot, which would be, would knock traders and investors' confidence in the US more so than we've actually already seen. And when we switch across to looking at the US dollar, you'll see how that is actually being played out. So Friday's numbers are going to be really quite important, those kind of non-farm payrolls, and I expect that we will see an awful lot of volatility in the run-up and around that session, especially if the numbers do not hit forecast. So that's interesting. And then actually into next week, it's a little bit of a quiet start to the sort of second full week of June. Tuesday morning, we will have the UK's jobs numbers. That'll be 7 o'clock London time. And then Wednesday afternoon, we will have in the US, we will have the CPI, the inflation numbers, the core numbers, the monthly numbers, the year annual numbers as well. And whilst let's say the CPI numbers are perhaps not seen as so important as they were 12 to 24 months ago, when we really was that major fight against inflation, people will still be interested to see whether there has been an impact once again from the sort of Trump's trade tariffs, whether that has any impact flowing through into the inflation numbers. Is that basically is that being seen as as causing deflation, or is it still sort of remaining in as inflation? What we might find is that President Trump and Mr. Powell, the head of the Federal Reserve, have a different view on that, and that's already been expressed in let's say sort of social media spats this week. We've seen from the kind of the White House and the Federal Reserve. And we will see whether those kind of numbers next Wednesday, exacerbate that problem, or basically calm these choppy waters. So not as much data coming out in the next week, but I would suggest that certainly in terms of the non-farm payrolls numbers, acutely important in terms of trying to understand the direction of travel of the overall US economy, because naturally that still has such a huge knock-on impact around the world. Okay, so there we go. There's some idea of the things and narratives in the news, and I do realise that as I say every week, it is important to be on top of the economic calendar. But it's also important to be on top of the news flow these days. We live in President Trump's world, whether we like it or not. Some people will love that. Some people will loathe that. That's absolutely fine. Those are different opinions. That is what makes a market, That's what makes a market, and that's what ultimately we're interested in. But of course, equally, we have seen, for example, a knock-on impact for Mr. Trump's comments, a week or so back about doubling the sort of tariffs from 25 to 50% on steel, etc. And of course, that can change. That can change in a heartbeat with one tweet or one comment. So, as traders and investors, you now live in a world where actually you also have to keep on top of social media in the sense of understanding, if Mr. Trump or even Mr. Bessent, the Treasury Secretary, comes out and says something as well. So that is, these are the things that as traders and investors, you need to be on top of as you operate in markets. Okay, so there we go. We're looking at the kind of the themes, the news, the narrative. Before we look at the live markets, as always, every week I like to set expectations. Once again, as I said, I appreciate some of the people watching this at the start of your journey. Okay, and so as an experienced operator, I want to be able to set expectations that you can take on board and work with, and understand and build into your own trading and investing way of operating. First and foremost, you hear me say it all the time, risk management is absolutely key. Okay, you always honor it. If you're at the start of your journey and not necessarily sure about risk management, what it is, how to do it effectively, as I say, you will find there is lots of educational content on the Admiral Markets YouTube channel, on the Admiral Markets website, that will help guide you and educate you about that. So please make yourself aware of that. As we've just looked at, know what news is coming out for that week ahead. And if possible, certainly for the kind of longer term operators, try and conduct your analysis before making your decisions. And what I say is that, I love the weekly charts. Okay. An awful lot of my swing and position trading is done off weekly charts. So basically, I have 2 hours on a Saturday morning where I can sit and go through and do my analysis. And one of the reasons I like that is because markets, certainly, normal markets are closed. So there's no distractions from markets. There's no temptation, okay, to chase moves or anything like that. I can sit, do my analysis, and then make my plan for the week ahead. And where possible, I suggest that is also the effective way to operate. Goes without saying that you should have a good internet connection and that you should be rested and prepared before your session, before you're engaging in markets. To note, just remember that for long-term trading and investing, we are looking to be long-only buyers through the MT5 platform here, okay, on the invest.mt5 account. And if you are just want to understand what you'll see on my charts, okay, my charts are set up pretty cleanly, pretty easily to understand. Blue or green bullish candles, red bearish candles, a few simple mirror period moving averages, a blue 20 period moving average, a red 50, a green 200, and some grey fractals to basically just help give me a sense of what's going on in the markets. And before we switch across, okay, I do recognise that many people will understand and know Admiral Markets from trading, but may not necessarily recognise and understand that Admiral Markets also provide an investing account where you can buy and operate your UK shares that I'll mention in this webinar. You can open one an invest.mt5 account, okay, through the dashboard, and then you can either open the web trader version or download it, as you'll see. I have. And then you would just use that MT5 as you would normally, if you've been using it for trading, it operates in exactly the same way, but this way you'll be operating on UK shares long only. All right, so why don't we switch across the charts and see what the markets are telling us, shall we? Let's have a look. So if you'll just bear with me for a moment, I'll switch across to the platforms and we'll take a look at what's going on in the market. So as I said, just bear with me for one moment and we'll switch across. Okay, so I'm hoping that you can still see me, hoping that you can still hear me. Okay. Now I am I'm on the Admiral Markets MT4 platform. I use the MT4 platform for trading, the investor MT5 for longer term, long only position trading and investing. Okay. I find for me hard boundaries work the best. Okay. That means you're not tempted. Okay. And so that's what works for me. Others may have other ways of operating rules, and that's absolutely fine. But I have this set up for my kind of trading pathway. And so let's have a look at what's going on in the markets. So let's bring up my drawing tool and we can go through here. Right. So this is a profile I have set up for indices here. I've got Dow Jones, the DAX, S&P 500, the FTSE, NASDAQ, Japanese Nikkei, ASX, which is the Australian index, Hang Seng 50, the Hong Kong index. Okay. So I have them all there, as I say, every week because I want to be able to just take a snapshot of what's going on in the markets. So here we are into the start of June, coming into towards the kind of second half of the year already. And if you haven't already noticed, these are all on monthly candles. So not only do I do my kind of weekly analysis, but on the first day of the month, I also do my analysis of monthly candles for my longer term positions. And it's always interesting to take a quick look because you sometimes just get an idea of the overall sort of sentiment in the market, whether we're bullish or bearish. Sometimes you also get indications of where volatility is starting to sort of, let's say, coil up before it gets ready to expand again. So the interesting thing for me was that despite all that volatility we had in March and April, if I look at the Dow, that is still a bullish candle. Same for SP 500. Still, last month was a bullish candle. It's all operating almost like a huge kind of morning star formation. Nasdaq, okay, was a big bullish monthly candle. ASX, okay, was bullish candle. Even the sort of Hang Seng, okay, had a bullish close, okay, perhaps not maybe as joyous as some of the others, but that's what we can look at. Even the Nikkei, okay, even the Nikkei had a bullish close to home. The UK FTSE had a close home, and the DAX probably was leading the way in terms of not only was it a bullish close, but it was a bullish close at all-time highs, okay, which was quite interesting. So, as I said, even if you trade shorter time frames or look at swing positions on the first day of the month, it is always worth going through the monthly candles, okay. Even as I said, just to give you an idea of the sentiment, just to give you an idea of what might be building, okay. Of course, it's the monthly chart, so actually it might take 2, 3, 4, 6 months for a pattern to start to build, but that in itself can be beneficial and useful and give you insight into how to operate there. So those ones there. But let's get a little bit lower and look at, in particular, what are we seeing on those American indexes? So I'm just going to bring the day down to begin with. So what we can see is, let's just make this a little bit, maybe zoom out a little bit so we can just see the kind of correlation in the moves between. So what we have been looking at here is, so this is the Dow on the weekly. What I've been looking at, I look at this as kind of like a 3-bar breakout here. What does that mean to me? This candle here was quite a bearish candle, but it's like it engulfed the candle before it, and it was an inside bar after it. So it kind of almost becomes like a diamond in the price action, if you look, okay. So to me, that's telling me something that in terms of price is broadening and it's contracting, and now I'm expecting it, waiting for it to move again. Sometimes the catalyst for that is abundantly clear. So perhaps maybe the non-farm payrolls on Friday might be something that has the catalyst that has us expand again. Okay. Sometimes it's not that clear. Okay. And that, welcome to trading and financial markets. That's the way it can sometimes work. But I've been intrigued by how we've seen that operate across those American markets, and what we've seen at the start of this month so far. Okay, and the start of this week is we have been a little bit bullish on those American indexes, haven't we? There's a little bit bullish. Okay. Is that a case of the sort of pump before a dump? If the numbers out of NFP are poor, that would be one scenario that I would be considering. And it's kind of, we're in an interesting space because if the jobs numbers are poor, that would indicate that the economy is invariably sort of it's starting to sort of thinking of the right word. Okay, so there is an ebb there. Okay, rather than the flow we've been in, there is an ebb in terms of the business cycle that we find ourselves in. Many people would say we're probably at the end of a late business cycle, but then equally many would say that that has been for a while now. But what we'd be kind of waking up to watch and see is a case of do those numbers, if those numbers are as poor as the ADP numbers were this afternoon, that will be a little bit of a shock to the system. And the interesting thing is that we would probably see a sell-off in indexes. But the thing is, such poor numbers might also have President Trump get his own way in terms of having Mr. Powell start to look at cutting interest rates again. Mr. Powell so far has said he's quite comfortable where interest rates are at the moment, but if the jobs numbers start to look a little bit tepid, and the CPI number next Wednesday equally looks tepid, okay, as it shows that inflation is under control, okay, and that it is falling, well then invariably, we might see Mr. Powell change his tune and cut interest rates, which would be initially seen as good for markets. Maybe not necessarily good for confidence, but would necessarily be seen. So we're in a little bit of I would say we're kind of like like on a kind of a seesaw pivot at the moment, all right, in terms of just waiting for some data that might be the catalyst to give us an indication that actually, those fears are unfounded, and we have a strong summer, or whether people are starting to be nervous about the impact of the tariffs, the impact of different policies, and the impact that might be having on the US economy. So we're in an interesting spot at the moment. So whilst we are in an interesting spot at the moment, certainly when it comes to Germany and the DAX, okay, on the other side of the Atlantic Ocean, and that has not been the case. We've gone down to the weekly chart, and I know those of you who join me, we've talked about how price rallied up at the start of the year, put in a lovely double top, fell away, and then has rallied back up. And not only that, rallied back up to new highs. I think I said last week that the price action might not necessarily be the most convincing. Okay, we can see there's lots of wicks there, but the reality is that we are continuing to push our way. And if we look at even this today, looking at the intraday chart, we pushed to these highs. Okay, during the European session this morning, absolutely really pushed to that. So there's some kind of good news out of Germany itself. There's also elements of let's say, sort of confidence in terms of some defence and infrastructure spending, certainly in Germany and other parts of Europe, but we'll look at that in a moment. But, we started off this, the start of the European session began very, very strongly, and then we printed, this was a lovely bearish key reversal, engulfing candle where before we ran into the American session there. But if we're going into the daily charts, okay, you can see that, it looks like we're going to have another strong daily close. And what I'm intrigued in, okay, as a technical trader, is that the 20-period moving average here. All right, look at here, it bounced off it here, bounced off here with a couple of lovely bullish pin bars. Okay, just nice and simple. That is in an uptrend. Okay, so I'm interested. When price pulls back, that's what you're looking to work with, and that's what we see from the DAX. If we look even closer to home, well, in the FTSE, let's get down to the weekly chart. I think I said last week is that yes, FTSE is working higher, but it's grinding higher. Okay, where we can see DAX has been pushing to new all-time highs, that has not been the case with the FTSE. Although this week has had an impact there, and we're going to look at that in a moment when we look at UK stocks, and in particular UK defence stocks, which have been the rage this week. Once again, if I go down to the daily chart, it has been grinding higher, okay, for since mid-April, really. Since mid-April, we're 6 weeks into that, okay. And I would be looking at this. Let's just draw onto here. I'll be looking at this as is this a sort of a kind of an ascending triangle that is kind of building there. I might not have drawn that, but as I always say, I'm a better trader than I'm an artist. But you might be looking at that as a natural, classical technical analysis ascending triangle pattern, and for that to basically, that would be, we'd need good news out of the UK to push us up to that high that we saw there. Okay, just 3 months or so ago. That's been, even for the FTSE, that has been quite some move and some turnaround over those 3 months. But I wonder, we would need something to be a catalyst to basically to push it up now. I have been I've perhaps been maybe a little bit negative in saying that an awful lot of the strength we've seen in both UK sterling and UK FTSE has been more of an anti-US dollar trade, as in main capital allocators shifting money out of the US into the UK, more so than an intrinsic UK strength story. Some people might differ in that opinion, and that's fine. That's what makes a market, isn't it? But all we have to do as traders and investors is you have to sort of work with what you see right in front of you rather than what you want to see. And so my view would be that is an ascending triangle, and I'm waiting for the catalyst to basically to give it the shove, for want of a better word, back up to that sort of 89.10 level. Okay, that would be that. And then I'm always, from the way I like to operate, I'm always intrigued to see how does price actually play out when it hits new highs, new lows. Okay, that, to me, the market tells me a lot there. The market's communicating a lot to me there, and that's when I start to get really interested. So that's what I see there in FTSE. Okay, it is grinding its way higher, and we'll have, as I said, We'll have a look at UK defence stocks in a bit, and that might give us a bit of insight into why we continue to grind higher on the Asian. Okay, let's just put those into the Asian indexes. Okay, they continue, especially this sort of boom ASX, and here we go. ASX continues to sort of push its way higher there. Okay, and as you know, even Hang Seng, kind of works. I was worrying a couple of weeks ago about whether we were going to sort of roll over, but so far this week has been kind of bullish. The Nikkei is an interesting one. We have got, I think, next week, next Tuesday, perhaps there might be some announcements from the Bank of Japan. We'll be looking to sort of just have that confirmed. We'll have to look at that. But at the moment, when I look at that on the Nikkei, we're up against the weekly 50 there, aren't we? We're up against that weekly 50. It hasn't been able to close above it so far. It's acted, and I think I had a very small time short to trade off that. If I go down to the daily chart, I talked about this a little bit. At the moment, I'd be interested to see, is that effectively, a kind of a double top, but also a little bit of a coiling up. Okay, price is coiling up. Once again, if it is confirmed that there will be a Bank of Japan meeting next week, well, then maybe this is the kind of the coil before that news is the catalyst for the next move. Okay, so that's what I'll be looking at on the Japanese Nikkei index. And before we switch across to the dollar, I appreciate some of you love trading and investing in gold. So let's have a little look. Here's the monthly chart, and remember that's a monthly chart. So really for the last few years, that has been in quite a considerable uptrend there, hasn't it? And as you hear me say, all right, when markets tend to only trend 20 to 30% of the time, okay. So when they are in a very clear trend should leap off the chart at you. You shouldn't be fighting it. You don't need to force it. Okay. However, as Echo and the Bunnymen sang many, many years ago, nothing ever lasts forever, and nor does a trend. And what we see here is that kind of move. Then, interestingly, last month's candle it's an inside bar. Okay, it was inside it, and also pretty much closed where it opened. It's a real kind of doji, which is normally indecision. Now we've started this month quite bullishness now, but of course we are 4 days into the month. There's still 26 days to go in June. Okay, so things could change quite considerably. But if I go down to the weekly chart, some of you join us or talk about, I was interested to see whether we had this kind of almost like this bullish flag pattern had been working its way, okay, and building. And it looks like we're breaking out of that. If I go down to the daily chart, okay, to look at it, we talked about this a few weeks ago, is that, price was pushing back to the 50, but the 50 has acted as really good support. When I see that, I would look at that as, that's a very strong rejection candle, a strong pin bar. This is a strong rejection candle as well. I was talking about how I like to see flag patterns end with a strong, bullish pin bar rejection candle, and that's what we've seen there. And I think I might have said last week or at the start of this week about how I was intrigued about how oil and gold were kind of how they were operating in relation to their daily 20-period moving average. If you look there, that 20 is going sideways, but actually, if you look at it, it has provided a level of dynamic support there, and pop. What we've seen this week is a break of that. Now, interestingly, okay, of course, as I said, we've had some poor data out of the US today. I'd be intrigued to see what the non-farm payrolls numbers are like on Friday, because if they are poor, that will just add to that kind of uncertainty, which has been poor for the dollar today and good for gold, as we'll see. But then equally, we'll have that could have a similar impact if we see what the data is like on Friday. Yeah, and you can see here that I've just gone to the 30-minute chart here. This is the start of the US session, okay? And as you can see, as that poor data came out about the US, we can see that gold jumped there, and it jumped quite considerably. So, where were we there from? What's that, about 33.52 to 33.84. So, we went up $32, okay, in an hour. All right, that hopefully gives us just a bit of insight into what markets are thinking, okay? And when we see that uncertainty, that's when we've seen gold making big consistent jumps like that, allied with weakness in the dollar in this particular case, and that kind of leads us on nicely to let's have a little look at the dollar itself and what's been going on there. Excuse me. So, I talked about how here we are at the start of the month, and it's a good time to look at the monthly candles because that might be giving us some indication. What I found from my own monthly analysis at the start of June is that there was an awful lot of inside bars for last month and inside bar pin bars. Now, inside bars, that's not a massive shock based upon the huge candles. So, for example, the huge candles that we had in April after the Liberation Day Trump tariffs. Okay, there's not a surprise to see that we had huge volatility, huge moves in April, and then May was it was a inside bars contracted. But as I said, there was an awful lot of them across an awful lot of asset classes. But here I have this is my dollar profile. So I've got Aussie dollar on the monthly, Kiwi dollar on the monthly, Euro dollar on the monthly, pound dollar on the monthly, dollar Swiss on the monthly, dollar CAD, dollar yen, and dollar index. And we're going to look at dollar index in particular in a moment. But I just want you to, for the moment, the monthly candle there, the dollar index was a bearish inside bar pin bar. Okay, and on dollar against Japanese yen, we had a bearish inside bar pin bar. On the dollar against the Swiss franc last month was a bearish, inside bar pin bar. On the euro against the dollar, we had a bullish inside bar pin bar, which is the reverse of the dollar index. So that kind of starts to get me a little bit, intrigued. Okay, when I start to see kind of, correlated patterns and setting up across a few instruments, and certainly on a big chart like the monthly chart, that is enough for me to start to sit up and take notice and to look at, well, how can I use that, right? How can I turn that into, turn it into an opportunity for myself? And so we'll have a little look at that now. So, I just wanted to share that with you, okay, just so you can basically see what's been going on there. And then let's have a little look at the dollar index here, okay? So as I said, the monthly chart, we closed beneath that 100 number, all right, inside bar pin bar. When I go down to the weekly chart, okay, remember I had been talking about when maybe we were going to, reverse off that, and we did, and then we didn't, all right? Then there was, more tariff tirades and talks, etc., and we dropped ourselves away there on the weekly chart. The daily chart, okay, I had talked about how I was looking forward to seeing perhaps an inverse head and shoulders pop up. My scenario, if you remember, I was like back down to 100, and then if we're bullish, we break the 15, head towards 200. So it's perfectly fine to have a scenario because if the price plays out like that, I will join that. But you have to trade what you see, not what you want. Okay. And as we can see here, okay, the basic price broke back beneath that big round number of 100. And since we've been beneath it, we've not really been able to close back up above it. And so now I see it's kind of almost in a range there, okay, between 100 and 98.50, almost like a 250 pip range there on the dollar index, batting back and forth. We're at the bottom of it now here. Okay, we're in. Let's clear this up a little bit. This is certainly on the daily chart. This is a downtrend, isn't it? It's a downtrend. Okay, that's I would look at that as being, that is trading in a channel. And once again, I'm looking at is will Friday's data help, okay, the dollar, or will it hinder? Certainly today, the poor data basically dropped the dollars. We'll look at in a moment. If we get once again, and it is this is just scenarios before big news that if the number is a weak number and undershoots, well, I would expect that to be poor for the dollar. But then equally, if the number is, overshoots to the high, well, that I think would be positive for the dollar and could have us back up to 100. Okay, so that would be the scenario I'd be taking in over the next couple of days. And if I just go down to if I go down to the sort of 30-minute chart, okay, this afternoon, as the US data we talked about earlier, the kind of ADP numbers, and then the services PMI numbers, you can see that basically for this afternoon session in the US, that we just sold off there. All right. So that's if we get NFP equally undershooting that, that would be my scenario, okay, at this moment. All right. So you have that in place there. Then, of course, you're looking at, well, what impact is that having elsewhere? So once again, you're looking at euro dollar because, the dollar index is made up about 57% by the euro. Okay, so there's a great inverse correlation there. So as we had that bearish inside bar pin bar on the monthly chart, that's why we've got this bullish inside bar pin bar on the euro. Now, of course, we have ECB tomorrow, and people are expecting interest rate cuts, which would normally kind of weaken the euro. But I think there is such an anti-dollar sentiment at the moment, rightly or wrong, there's an anti-dollar sentiment at the moment, and that invariably even bad news could sort of lift the euro. Okay, that's the way we're working at it. Certainly, on the weekly chart, we kind of looked as if we're pulling back to the 111, and now we're working our way back up here. If we go to the daily chart, that daily chart, we came back down to the 50, and we're now up above the 20, and the 20 is acting as support there. Okay, and we're just working our way. As I said, most traders and investors have baked in a 25 basis point cut by the ECB tomorrow. It'll be more about what Miss Lagarde says after that in the press conference. Okay, if she says that there are going to be no more interest rate cuts for the rest of the year because they feel inflation's coming back, that'll have an impact. Or if she says that the situation's showing and they can cut interest rates much more, okay, and there could be a couple more interest rate cuts towards the end of this year, that would weaken the euro, I would suggest. So, we are bullish. Okay, this is still bullish. Okay, we're still above the averages. But I'll be interested to see after the ECB tomorrow and NFP on Friday. We've got two big news announcements that will have an impact on the euro there. Okay, so that's what we're looking at with the dollar and the euro against the dollar. Let's have a little look closer to home. What we'll do is we'll have a look, as always, we'll have a look at UK sterling, and then we'll have a look at UK stocks. So let's have a little look here. Okay, so UK sterling is, on my own model, it is, top of the pile. Okay, I've been sort of top of my own stamp model. Okay, where I look for strength and weakness in markets. What we're looking at is, that's what the market's showing. You want to understand, what is the underlying theme, the narrative there. And so, if we look at, let's start with cable, pound against US dollar, weekly chart. I said a few weeks ago, I thought, we were here at last year's high, and I was looking at all of these pin bars thinking, do you know what, we might actually roll off the top here. And we did. And then invariably, there was some more tariff talk. And as you can see, that basically weakened the dollar, and in doing so strengthened sterling. So sterling has strengthened, because of a weakness in the dollar, I would suggest. And also, as I said earlier, a little bit of the big major capital allocators perhaps taking a little bit off their US positioning and placing it elsewhere in kind of UK and Europe. So that undoubtedly the incumbent government will take all of the glory for that, but really it is more of an anti-US story than a pro-UK. That would be my particular view. But listen, as I said, you trade what you see, and that has been a bullish trend, and it continues to be one. That daily chart, we talked a little bit about it the day that was about, here we go, like a little bit of a kind of a nice little sort of bull flag there. Okay, that we've seen up above the 20, up above the 50, up above last month's highs. We're holding up above there. So we've got US news, okay, in the next couple of days, and then we get UK news next week. All right. So at the moment, that still looks strong. Sterling, weak dollar. Okay, that's the story we're looking at for there. That's the way I would be. That's the way I'll be sort of viewing that. Look at pound against yen. Pound against yen has been an interesting one for me. That's the way I look at it in terms of certainly for the longer term trades, because what we have seen is there's kind of an interesting crux there between both the sterling and yen. Okay, sterling seen as a risk on currency, Japanese yen seen as a risk off, and after a bit of a V shape over the last month or two, the last couple of weeks we have been sort of hammering up against the weekly 50, but wicks to the side. Okay, wicks to the upside. And what I've been looking at here, I would look at this as intriguingly. If we look at this is the daily chart for last month. This is kind of almost, like I'm looking at that as like almost like a double top, a double top with the first leg finished with, a bearish engulfing candle. The second leg finished with another bearish engulfing candle pin bar up against that sort of trend line. And so I'm kind of curious, and this is the kind of view I'm coming to, is that we are coiling up here. Okay, this is a coiling. This is almost. I'm going to look at the same in pound against Swiss. It's almost like coiling up, a kind of like risk on, risk off trade. And once again, we might get the catalyst over the next week, because if we do get the Bank of Japan meeting, and we get the NFP numbers, okay, if they're poor and that basically pushes everyone into risk off, well, then invariably, if we go risk off, I would be expecting us to kind of roll over and break that 50. If we are all risk on, well, then I would expect price to move higher and to break that. So as I said, I'm looking at it as kind of coiling up there at the moment. And we're waiting for that catalyst. Certainly, that is a reversal pattern at the moment. But we've also got the kind of the daily 200, the daily 50, the daily 20 price. It's all wrapping up. All right, it's all wrapping up. It's like the kind of coil, like a coiled spring. That's the way. That's the way I'm looking at it. So, yeah. So we'll wait and see how that takes. And another good example of that is pound against Swiss franc. Okay, you hear me talking about this all the time. So this is the weekly chart, pound against Swiss franc. Risk off at the start of the tariffs, and basically, Swiss franc strengthened, sterling weakened. As everyone got into a bit of tariff fatigue, well, we had a little bit of a risk on rally, relief rally, and basically sterling strengthened and Swiss franc weakened. Okay, and that's what we can see there on the weekly chart. But a little bit like the pound against yen, the pound against the Swiss is a little bit the same. Now, as I said, by my model, um, pound and Swiss are kind of like top two on the in terms of strength. And generally, when they're kind of, I don't generally tend to want to trade strength v strength. I want to trade strength v weakness. For me, I look at this as, for the last couple of weeks here, the last 3 weeks, this is price just being in a range between, what are we looking there? Between about 110.50 and 112. Okay, 110.50, 112, about 150 pip range, and maybe a little bit more than that, but it's still quite a tight range. And once again, you've got what looks like maybe a double top, but also price sort of wrapping its way up with moving averages. It's a calm before the storm. And that's what I was saying to people earlier this week in my own groups about, if we get a risk on sentiment. So let's say the NFP numbers, are absolute, they actually blow out the other way. They're super positive. Well, but everyone will get a little bit risk on giddy, and I would expect us to basically see sterling strengthen and Swiss franc weaken. On the alternative side of that is that if the numbers are poor and everybody gets uncertain and worried, well, then I would probably be expecting pound Swiss to sort of work its way back down here, because that would be sterling weakening and the Swiss franc a risk off currency strengthening. So I've been saying this for a couple of weeks. It looks, to me, it looks like it's all coiling up. We're getting ready to work its way up there. And then if we look at euro sterling, okay, euro sterling is kind of an interesting spot as well. We had this. There we go. And this is the weekly chart. Okay, we had lower high, flip the 50, and we had all that kind of euro giddiness, which was basically, as I said earlier, anti-US more so than pro-Europe. And then what's happened is that as that kind of sanity sort of returned, we saw euro sterling fall back to this 84 level, where the 50 period, and now you can see you've got 1 week with a wick up, 1 week with a wick down. Last week was a pretty bullish candle, pretty bullish, weekly bullish candle there, bullish rejection, bullish pin bar there off the 50 period moving average. If I go down to the daily chart, okay, a little bit like euro pound Swiss, we had a little bit of a going in a little bit of a sideways block, but then last week we printed this really big, strong, bullish engulfing, bullish key reversal at the 200 at 84, and I'm intrigued now to see, well, positive would be pump up there, but that would mean euro strength, sterling weakness. Now, sterling has been strong, euro has been strong, but people are expecting euro interest rates to be cut tomorrow. That's probably baked in. As I said, people will be interested in what Mr. Lagarde has got to say in terms of the future direction of interest rates in Europe, because I think that will also have an impact on that kind of that euro scenario. So that's what we'll look at there. Okay, so there, is a bit of insight into sterling. I want to switch across now for the last few minutes to look at some stocks, and in particular, what we're going to look at. So I'm going to switch to the Invest.mt5 platform here, and in particular, what I've got is, aerospace and defence. So what we have seen here in the UK at the start of this week is we had the announcement of the Strategic Defence Review. Okay, lots of fluffy ideas, okay, with very little costings or very little, genuine absolute commitments. However, that has not been enough to basically dent the enthusiasm for aerospace and defence stocks in the UK, and that's what we're looking at here. And so, in particular, the kind of the biggest one, British Aerospace here. Let me zoom out here. Here's the weekly chart. British Aerospace has been on a bit of as you can see there. This is the weekly chart of the last couple of years. It has been well, but it has accelerated this year. Okay, it really has super accelerated, and you can see, we've had a little bit of the volatility from the tariff talks, but then as the UK has come out of those tariff talks and had the first deal with Trump, you can see that that has had an impact. Now, of course, although it's British Aerospace, they are a global defence company, do an awful lot of work in the US. And so invariably, you can see that that has just, rocketed up there from where we opened, all right, where we opened the start of this year, 1150. Okay, we're presently trading 1970. So from 1150 to 1977, that is, just quite some stratospheric run there, isn't it? Okay, and it's you have to do ask, is that feasible to maintain? I think what might happen is that this is the giddiness that people have come out with. Basically, the US, NATO, the UK, Europeans talking about raising their defence expenditure. There's of course there is a giddiness to sort of for people for capital to flow into those accounts. I think what will happen is that as the costings and the actual details come out, we might see a little bit of a dip. But then actually, as the kind of the actual orders come out, then we might see this defence and aerospace sector go again. But you can see for yourself that has been quite some significant move in British aerospace. And if we look at a couple of the others, so our perennial favourite, Rolls-Royce. Okay, Rolls-Royce, who make engines for both the commercial sector and the defence sector, and they also make nuclear reactors for both the defence sector and other elements. We can see for ourselves, okay, that having rallied hard, then been hit hard by the tariff talks, you can see, we have really kind of recovered and recovered strongly there, haven't we? And that's, Rolls-Royce has been doing that. We look at CHG, Chemring. Okay, Chemring, they themselves a little bit more volatile than British Aerospace, Rolls-Royce, but generally up. And we had seen it earlier this year an offer to buy. And what we saw a little bit of a bump off that. Then we've had the Trump tariff tirade pullback, but then once again you can see how far we've hammered up there. Okay, and we've also had, I think, good results this week from them as well, which is of interest to us. And you can see from where were we for those lows at what 295, okay, 295 earlier in this year, we are now trading what's that 558, okay. That is a considerable move, okay. That's a considerable move, all right. And you can see that is just a real strong reflection of the interest and the capital flows into defence at the time. Along with that line, you've got also Kinetic. Okay, Kinetic have been an interesting one, all right, in that once again, whilst the direction of travel has been bullish, it has not been as anywhere near as a lovely chart or a lovely trend as, let's say, Rolls-Royce. And in fact, if anything, there's been really a good deal of volatility in Kinetic because initially, we can see if I just zoom in. Initially, they jumped up high on invariably the sort of US defence spending and invariably just overall UK defence spending, but then invariably it was seen that they were going to struggle to basically fulfil their contracts, and we saw price really, having rallied its way up there from about 350, having rallied its way up there to about 530. It collapsed again, okay, and once again it collapsed to its low. What's that? 334. But then you can see, that has returned and resumed itself there, hugely back up to 547. And I appreciate that is even for traders, even sometimes for investors, that's, it's a very difficult trading period that, okay, in terms of the volatility there. Hence why, some people, are talking about just being able to take a position and walk away, because actually if you are actively trying to engage with that, you might find that pretty eye-watering, all right, to manage as a bit of a trade in a position. But hopefully that has given you just a bit of insight into, with British Aerospace, okay, Rolls-Royce, Chemring, Kinetic, and sorry, final one, Babcock, who are the best today. This is Babcock, okay, who are a sort of defense infrastructure. Okay, they do an awful lot of support work for defense. Well, once again, you can see where we have been going here. Okay, that yes, we've been a nice trend, but that trend has just accelerated this year. And Babcock led the whole of the FTSE higher today, and that's what we've worked with. And you can see that is just rightly or wrongly. Okay, I appreciate that some people might not necessarily, their own trading and investing plan might not necessarily want to be involved in defense or aerospace stocks. And once again, that's absolutely fine. That is what makes a market. Okay. But, just even as an understanding for those of you at the start of your trading and investing pathway, understanding the kind of major themes, those major narratives, rightly or wrongly, and being able to enact and see and trade and invest in what you see right in front of you. As I said, good trends leap off the chart at you. Okay, you don't need to force it. You certainly don't want to fight them. What you want to see is, what are the ways that you can actually engage and work with them. And as I always say, think of yourself like a surfer looking to surf the biggest and the best waves. Okay, okay, ladies and gentlemen. So as always, time flies when you're having fun, and we've come to the end of our session here. As always, I hope you found that useful. I hope that's given you some good insight that you can take away and help you make sense of these eventful periods in markets. And as always, just turn your analysis into opportunity. As always, I wish you the best of success in your trading and investing endeavors. Have a fabulous week, everybody, and I look forward to seeing you next Wednesday, 11th of June. And I hope you'll join me then. Okay, take care and trade well, everybody. Cheers.